This is an analysis of the People's Republic of China. It is an overview given if a firm were to be potentially investing into China. This is a brief overview of what we will be talking about. We will be discussing China's economy, culture, investing risk, production issues, and marketing potential. Since the founding of the People's Republic of China in 1949, the economy has undergone major changes. Even though it is a planned or command economy, the government has been restructuring in order to help strengthen the nation. Command nations are distinguished by heavy government involvement and a lack of free market. In the last 50 years, the economy has become more blended with free market structure, thus making it the second largest economy in the world after the United States. 70% of the labor force is in the agricultural or industrial sectors, making up 60% of the GDP. The major products made are rice, wheat, corn, tobacco, soybeans, peanuts, cotton, cloth, and yarn, coal, and crude oil. Because of economic reform, China has increased the size of its industrial and manufacturing sectors. These new laws have allowed other industries to flourish, especially tech companies. The economy is expected to continue its positive growth if the government continues to promote urbanization, industrialization, and agricultural modernization. Growth was 7.7% in 2012 and 2013 and expected to continue in 2014. While the economy has drastically grown, China is still infamous in terms of the freedoms given to the financial and economic sectors. As a whole, the Communist Party's authority over speech, religion, and assembly trumps any laws of the land. In the late 1990s, 49% of all industrial output was produced by state-owned enterprises. That number has now fallen to 27. Even with all this growth, China is facing a major financial collapse based on the real estate market. In the residential market, prices continue to drop, but no one is buying. If this trend continues, the country will face a similar situation as the one the United States did in 2008. China is the most populated country in the world at 1.34 billion people and more than 50 different ethnic groups. With such a large population, the government has pushed education to the forefront. To help accomplish this, it has created one of the world's largest education systems. 4% of the GDP is used towards achieving this. Overall, 99.7% of all citizens have been through the required 9 years of basic schooling. To help keep the education systems at the highest levels, the government has created huge support behind being an educator. As much focus as there is on education, the opposite could be said about religion. Because China is a communist state, there is no official religion and more than half of the population claims no religious affiliation. Instead, there is a mixture of many different beliefs such as Buddhism, Muslims, Christianity, Taoism, and Confucianism. Chinese is the main language spoken, but there are many different dialects: Cantonese, Hakka, Wu, Ming, Xiang, Gan, Mandarin, and Putonghua, the last being the official national language of mainland China. When it's put to paper, the language is a series of characters rather than letters. The culture is quite focused on respect. Introductions are very formal. A person would introduce themselves with first and last name. They must smile or it's considered disrespectful, and the inferior is greeted to the superior. There are political issues within China like any other country. Only these issues are about basic human rights. The most common way the government deals with these issues is by buying off people's dissent. Because it is a communist country, China's financial systems as a whole is firmly regulated by the government. It also owns all large financial institutions which give favor to large state enterprises. Even entrepreneurship is seen differently. An entrepreneur has investors to help start up the business, but once it gets up and going, investors are supposed to leave. This way, the government has greater control over the business once the business succeeds. A business will face a lot of opposition in China when they are trying to invest because of the laws of commerce are different under communist rule, even with the adoption of many free market principles. Problems like insider trading is still happening. Potential investors also deal with giving face, which is paying off government officials with favors in exchange for potentially illegal activities. This is very similar to guanxi. Both of these are seen as standard business practices in China. China has some of the highest and most efficient production levels. However, the costs of producing are rising, along with overly expensive land and tax prices that are through the roof. Wages are 10%, or wages rose in 10% in 2010 and continue to rise since. In 2012, labor costs went up 20%. If this continues, it would be cheaper for North American companies to produce in-house. In the 1970s, China wanted to do a better job when providing for its citizens. To help with its human resources, the government invested into education in, for its people, which has enabled more and more people to get jobs and also more education. Most of China's financial resources came from overseas spending, the majority of which comes from the Western world. This is because of supply chain issues. China will need to remodel its supply chains and lower operating costs. Some companies are being relocated to Vietnam and India. Logistics is the key to all of this. It is intricate and will take a lot of money and effort to perfect. Timing will be the biggest issue. Of China's 1.3 billion population, 420 million have internet access. 747 million are mobile users. Yet, only 384,000 are Facebook users. This is because of the Chinese Facebook clone Renren, which has a 117 million user base. Any firm using internet marketing in China needs to be aware of the websites already there, such as Baidu.com, Alna.com, and Taobao.com. These are all used more than Google. The majority of research and development investment growth is in Asia, specifically China. Its own research and development will continue to grow. By 2020, it will top all other research and development in terms of spending. This has been occurring so as to create an innovative future in hopes it will bring about commercialized and advanced technology-based products that will give it worldwide admiration. This, combined with a large web market, would position any potential investor in a very favorable environment to conduct business. In the next 15 years, China is expected to join the group of high-income nations. The majority of those households have incomes over 25,000. This is the return value of all the R&D investing. The advertising law of the People's Republic of China, 1995, is designed to protect Chinese consumers from being misled or deceived by false advertising. It restricts a lot of advertising for pharmaceuticals and tobacco products. All advertisements may not use words like best, state level, or highest level. If violated, harsh punishments will be enforced. Advertising is either done via television, newspaper, magazines, or internet. Overall, advertisements are very expensive with little return on investment for foreign traders, but much cheaper for locals. This is done on purpose. Ads on the internet is the most popular and most successful, with most of the population using sites like Renren. The reach of advertising is growing constantly. And that concludes our analysis of China. Are there any questions?